A lot of us get our monies on a monthly basis in the form of salary. It's extremely important that we plan how we are going to manage the salary if we want to retire comfortably later. So investing from your salary is a very, very important part of one's financial journey. And that's what we're going to talk about in today's episode. So how to invest from your salary? First is define a clear goalpost that you want to have. What is that you're planning in the short term, in the medium term, in the long term? All of us have long-term goals of retirement, but we also have the short-term goals that we want to buy a bike or we want to go on a holiday, all of it. So it's extremely important to plan for your short-term, medium-term and long-term goals. So define those numbers. Second, create a budget. Extremely important, especially if you're starting up newly earning money, is to create a budget. The budget will help you understand what are all your incomes, where are all your expenses, and therefore keep tabs and ensure that the amount that you need to save and invest is done regularly. The budget is a very important route for ensuring that you put aside a certain set of money. Third, set up an emergency fund. The first investment that you make needs to be in a fund where you can draw if you have an emergency. Ideally, an emergency fund is something of a 3 to 6 months or even a 12-month base of your expenses. So if you know your 12-month expenses, keeping it aside in a separate account will give you a lot of mental peace that can help you progress in your life and your career and your financial journey. Ensure that your debt is managed well. Do not keep high-cost debt, especially the credit card rollover or the personal loans that cost you a very, very high cost are unnecessary debt. So do not keep them. Your first rule must be to clear and keep those debts off. Debts like home loan, which promote asset creation, can of course be considered, but not the other variety. Next, automate your investment cycle. Make sure that every time your salary hits your account, the amount that you wish to save or invest gets transferred to another place from where the investment can proceed. This is a very, very important step in the form of automating it so that you don't have to go and trigger it every time. Participate in a retirement plan that the company offers, be it a PF or an NPS account where the company is also contributing along with you. The company's contribution comes to you free of tax. Your own contribution gives you a tax benefit as well. The combined benefit of this over long periods of time can be quite extraordinary. So make sure that you optimize your retirement contribution, be it an NPS or a PF in your corporate account. Very, very important in creating a long-term retirement corpus. Make sure that you have adequate health insurance that can protect you and your dear ones in the case of any unforeseen health emergencies. I'm sure your corporate also will give you insurance, but if for some reason the corporate is not enrolled you, make sure you have a personal health insurance in place. Also, if you're a person who does not like stock market volatility or volatility that some of the mutual funds have, then you must enroll in what is called an SIP plan. Putting away money on a month-on-month basis so that you get an average price over a period of time. This works brilliantly, especially if you have a long time in terms of creating your wealth. You get an average that works brilliantly for you. So think about it. Put away money on a regular basis into an SIP plan, which can help create a big long-term corpus for you. Diversify your portfolio among a variety of different investments. Not just equity, you need to have a little bit of debt, you need to have a little bit of commodity like gold, so on and so forth. Make sure that you have a basket of investments going for you. Make sure that you spend a little time reviewing and rebalancing your portfolio at least once in 6 months or once in 12 months. Very, very important to relook at your investments, how they are performing, and if they are not performing really well, take corrective actions. If you have dependents on you, or if you have taken loans, then it's important to get at least a term insurance for yourself. These are low-cost insurance that provide you a high-risk cover that ensures that in an unforeseen circumstances, your family or your dependents do not go through a harrowing time. So life insurance is also a very, very important component of one's financial planning journey. Educate yourself. Investing is a long-term journey, so it's extremely important that you slowly understand how investments work, and you will make mistakes along the way. Do not bother. That's the way we all learn. So make sure that you constantly update yourself on your personal investments. Look at income tax as a blessing for you in some sense of how you manage your personal finance. Income tax can be a great boon when you plan your investments, or a bane depending upon how you manage your investments. So take cognizance of tax provisions and plan your investments accordingly. Last but not the least, investing is a long-term game. Make sure that you stay committed to the cause and look at things on a long term rather than a short term. And I'm sure you will create a great portfolio and you will have a great financial journey in your life.